Okay, cool. So, yeah, if you guys haven't used this chart, by the way, the BTC index, it's an index provided. It's like, if you guys remember the Brave new coin liquid index, was great, or it is still good, but this one constantly updates, and it's a combination of all the price points and levels compiled as an index. It's pretty accurate. It's very accurate for especially for a higher time frame. Plus, it's constantly open, so it's a bit better than the BLX. And I don't really use the BLX anymore. I just got to transfer my charts over. Anyway, so I kind of want to talk about swings, reversals, and Uber fibs. Just do a little refresher real quick on some swing structure, and then looking at that from like a reversal perspective, and then also looking at some Uber fibs. Now we can use those especially for high time frame targets. Because a lot of times when you have Uber fibs, or the way I don't even know how we coined the term Uber fibs, it's essentially what we look at is expansive price projection using like the Fibonacci projection, I guess. There's a weird, it's a hard way to explain, but essentially what you look at is the natural market cycles combined with the fact that the majority of the markets are automated. So there's quite a bit of confluence with, how markets move and compared to how they do, how the price itself reacts to these major levels. So looking at the local structure, I'll turn these things off real quick, and then we'll go from there. So on the local structure, it looks a little bit rough, just simply because we've been failing structure and whatnot. I think a good place to kind of start is looking at, the daily time frame, just to see like what we've done and what we haven't done. Failing, how we had on Monday, essentially, strong upside move on the weekend, now fully retraced, CME gap close, all that jazz. But we'll kind of focus a bit more on the swings, and then we'll use some tools to kind of pop that in there that can really help us. So how do we know this was the high? Again, massive deviation. Even before that was locked in, it took 2 days to lock in as far as the deviation. That's a great tool. But at the end of the day, you're looking at these things from like a perspective of swings. When we talk about swings, the easiest way to look at this is from the highest time frame possible, right? The only thing that really matters in the weekly time frame is looking, these are the macro cycle moves, the macro market moves. So something you can do, and you can do this, whether you're looking from the high or looking from the low, we'll focus on the low. It works on every single time frame, but understand where the structure tests levels is essentially it testing lower time frame ranges and changes in the supply and demand. So we'll kind of isolate that to start off with. It's kind of like, okay, if that's the bottom structure in the current move, right? We can all agree on that. There's no question about it. Just like this is the all-time high, right? There's no question about it. We had 4 weeks where we essentially closed above the previous high and then back tested it and then essentially failed. And once it did that nuke and then failed to regain it, it was done. Where did we get really short? Once it failed to regain, the kind of shoulder structure, I suppose you'd call it. In any case, we'll focus on the low because we could use that to focus on swings and then take that in a lower time frame. And this is also going to be used for, using our price projection or Uber fibs, that type of thing. So if that's the low, what's the important thing that matters? What bar matters? And it's always the same, right? It's the bar that creates the low. Now, you will have some issues with some of the bars looking janky, or maybe the low that it creates didn't close correctly. Maybe you had some more closures below it, below the low. But at the end of the day, the swing that creates the low, the closures, we care about essentially the low that was made, and then the most recent thing behind it. Usually, it's the bar that makes the low, and then the previous bar. And the reason we look at that is very often these are the stepping points, and you can do this again. We'll focus on it lower time frame, but this is where we look at the absolute lows. What matters? If that's the absolute low, I'll change the color so we can see them a bit better. What's the next level that's super important? Right? If that's the low, that's the high of the candle, not super important. Why do we care about this structure? Well, if the priority is going down, right? Or I'll use this because it maybe highlights it better, and I'll make it a little bit bigger. Boom. There you go. Priority is down. The trend is down. It's coming straight down from the highs, right? So when we look at the swing structure, where's the low of the swing? Where's the high of the swing? A lot of people get confused in this point, but essentially, this is a low swing, right? Because it's swinging down, it's creating new lows. Price always swings up and down. We're creating a new low. What's the important level that we care about? When we look at the closes, you can look at the absolute tippy tops of the bottoms for very low time frame, but generally where the candle closes essentially puts the most important range in perspective. So what do we look at? Well, we have our swing tool on and for auto charting, and it really helps with this. You can use swing points on the bodies and then even adjust the swing sensitivity down. And it'll give you the high of the swing. And the high of the swing is very important, but if that's the candle that made the low, that's the high of the swing. Okay, where is the low of the swing? Right? Where's essentially the major point? If that's the high, because we think about it in terms of high in relation to trend is down. So the high is there. It's at the low. It's at the 16,253. That's important because of probability. The low of the swing is here. It was the previous candle body close high. This little bit of price action constitutes the most important structure in the overall downside move. And that's because as long as price is above it, we are targeting this area, essentially the area between the low and the high, right? Low of the swing, high of the swing, for a retracement or for a bounce, essentially. So, and the reason we do that is that the probability, and I'll type it out just so we're on the same page. The probability of a test of the low of the swing is higher that we bounce and continue away from the swing than if we are testing the high of the swing. And the reason for this, right? Does that make sense to people? So testing the low of the swing, right? This is the low of the swing. And that's the high of the swing because we're doing this in relation to the direction of travel. Otherwise, you'd have to start flip-flopping your rules. And that's the probability is if we test the low of the swing, which we did on the week of the 19th of December, excuse me, bullishly test it and moved away, means that there's a higher probability that we continue away from the swing. Did we continue away from the swing to the upside? Yeah, of course we did. We all saw that. It was great. It was wonderful. Right? But if we test the high of the swing, the reason the probability is lower is that all of the liquidity is in one spot. All of the major high time frame liquidity is in one spot. And the weekly, it's not as relevant because there's going to be liquidity spread out below it. But on stuff like the 4-hour and daily, it essentially just means it's like looking at a triangle, right? You know how people like, oh, we look at the triangle and we want to, prices going like this, right? The only reason this is relevant is because all of the long liquidity is in one spot, right? I don't play triangles because it involves using trend lines, but when there's a flat top or a flat bottom, essentially all of the liquidity is in one spot. And if we keep testing that liquidity, what do we know about support and resistance? The more times it's tested, the less likely it is to essentially hold. And that's always the rule. Support and resistance becomes weaker over time, not stronger. So with that in mind, that's why we look at the low of the swing at the bounce. So let's go, let's keep that in play, and then we'll look on the lower time frame. How about the daily structure? Right? Is this respective of some price action that happened? Absolutely. The daily step off, what did this daily step off do? If this is the low of the swing on the daily, that's the high of the swing on the daily. We have a test of the low of the swing, price bounces, tests it, closes above, continues away, right? Still looks good on the daily. And what you could do is when you have these lows that are created on the daily, that's your initial chance to bounce. And then especially when you have a low, because this is a higher low, it's still a low, right? We make the true low and the absolute low we have, then we make a higher low. The reason these things are more important for bouncing is because what else did we do in this candle? We created a bullish engulfing daily candle. Now, it's not as important as a bullish engulfing or bearish engulfing weekly or monthly, but it's still important. And what do we know about these levels is that when we talk about demand, right? As long as we hold the demand, you have good opportunities to retest. You've created daily demand at this level. You've created daily demand at the essentially the major swing of the apps, like the weekly swing of the low. And now you're looking for a bullish move to the upside. And this is repeatable. This is why we look at this, because TA, the only thing that matters in TA is that it's repeatable and consistent. If it's not repeatable or consistent, then it's not valid. This is something that's repeatable and consistent. So we have these kind of step off moves. We have retests essentially, go down, go higher, and even lower time frame. We can play this game over and over and over again. You know, on the 4 hour, oh, we broke some new lows, right? Broke some new lows. Did we actually test major structure? No, not really. You know, move back to the upside, continue, break down, step up, close higher, move away, break down, close higher, some testing, move away. And it's pretty consistent, especially when you put these lows and highs in. And that's the important thing, is that we're seeing the kind of pattern that, well, we're creating these massive zones, these step off zones, these step off points. Another thing that also helps us is looking at the weekly. What else do we have in this zone? Well, what essentially is the high of the swing on the weekly time frame? It's also a bullish engulfing candle, right? So again, another argument for extreme continuation. A move again, bullish engulfing. We had some bearish engulfing that closed, right? Like, but what else that's important with this? We didn't break out and make new lows. So you could still use this kind of like bullish engulfing, bearish engulfing structure because it shows a major change in the trend. But at the end of the day, if we're not breaking down and making new lows and we're not breaking structure, it's not as valid as if to say, well, that's still a bit sketchy if you want to try and long it. That's where we've stepped away from it. We've moved away from the price. That's where we want to hold and not make new lows. So that's a higher time frame perspective of understanding bullish and bearish engulfing candles, swings, and then looking lower time frame, probably a little bit more to what we're doing now. What do we see that's important in the local structure, right? We created a high on this 1 hour. It's not super relevant other than we've bearishly back tested the current monthly open. What else is important about that monthly open? Well, the local high in all of this structure is here. Where's the high of the swing? That's the local high. We know that price leading up to that point, right? Priorities up because we made a new high. So in relation to that, if that's the high of the swing, that's the low of the swing. What do you get? You still had a retracement, like you still tested the high of the swing, but you rejected it. And we can use that even, you know, on the 1 hour here, we can go lower. Is there a valid point to short it? Kind of, sort of, not really. It's a bit harder. What about really low time frames? Failure, secondary failure, tertiary failure, and all the way down. So with these moves and these failures, the moment when you have secondary tests, things that, you know, high of the swing and it's the June level, we want to short that with a tight stop to move back down to test structure to the downside, right? We created a new low here. What do we want to see tested? That's the low, right? Where's the high of the swing? Essentially that. What's very clearly near it, the daily open. So what happens if we break back down to the level? Is it a bullish engulfing candle? No. Is there massive demand there? There's demand below it. We can see that with the candles, with the wicks going lower. But on the 1 hour, it's not as strong. That's still a target. Yeah. Not necessarily. It's the candle that's nearest to the low. Yeah, so good point, and I'm sorry about that. When you're looking at this structure overall, you're looking at the candle that's nearest to the low. So this is the one behind it. That's a little bit more dangerous. You can still use it. I'm, you know, not saying you can't. Still a pretty decent step off point. I know some people that do. I like to use the stuff locally, but I guess for confluence, let's just keep that as the rule. Okay. So the candle that makes the low and the candle behind it, because we're moving to the right. Let's just keep that. Again, on the 1 hour, this is not as clear overall because of the absolute structure that we made in creating a new low. Looking at the 4 hour, It's a little bit better as far as like where we want to see tests, right? We'd like to see some tests here and at the daily open. It's a bit more clear. I'd say the 4 hour is a really good point to look for, essentially step offs that create higher levels. So when you have major points like this, such as we create a new high here, and that's the low of the move, it gets a little bit convoluted. And that's why you're only looking for essentially 4 hour structure, maybe 1 hour structure, where you have the levels very near each other. And when you have levels like this on the 4 hour, or levels like this, where you have essentially major demand zones, or major, this is essentially demand, this is essentially supply. Where do you want to see gains that go higher? You want to see a gain that goes higher than the supply that's holding us down, because that's what it's still doing. But yeah, thanks again for making that point, Egil, because it makes a lot more sense. Just to focus on that, just focus on the previous candle that makes the low. So again, yeah, yeah, it's a little bit different on the lower time frames. Like on the lower time frames, it can be a little bit convoluted, I guess. I would focus myself. Like when I look at that, I always look at structure like this. Like this high is very, very clearly the one that's in control, even on the 1 hour, right? We have the step off, we have that structure. That's where we want to see the reversal and failure, right? Even if you got a secondary loss, you can, again, 3-to-1, 4-to-1 risk reward, continue to short the failure of that high because it's a very clear high that's put in. Comparatively, we haven't had really bullish demand zones outside of essentially what we did back in the first yesterday in the afternoon, right? So you can make that argument, absolutely. But this is kind of the easier way to look at it in the overall structure. And oftentimes when you create new lows, it's the same thing as when you have bullish and bearish demand zones, you'll see quite a bit of overlap, right? Here's a big bullish demand zone, right? At around about the same level that we had a bounce and a continuation move. But that's all relative to the price action and all relative to the fact that we're still using swings. So they kind of like roundabout again on swings and swing structure. You want to use your higher time frames to kind of outline the importance higher time frame and to make sure that you don't get the tunnel vision. If you're down here on the 15-minute, right, and you're trying to just short structure, oh, that's the high that's created. I'm only looking for a short, essentially there. You'll end up missing a lot of things overall. And that's kind of the problem because we want to see that real continuation move, that real ability to short structure and failures comparatively. What's more important here and relevant? Probably losing the floor there of that upside range, right? And bearishly retesting it. So at the end of the day, with the swing structure, with the ranges that we create from it, everything that we're doing because of the swings, there should be some relation from high time frame to low time frame. If you see like a structure or a swing from like the daily or the weekly that has nothing to do with the lower time frame price action, from essentially the 1 hour, if you're doing like daily or weekly swings, it's probably not as relevant of a level, and that will happen. So at the end of the day, I think the swings are pretty easy and to kind of give you a perspective of like failure of level. And something that I've been using a lot with this is the MDVD, and to kind of hit home with what we're doing with this. Essentially, what I look for the most part is I'll set on the 1 hour and the 4 hour to try and find points in which we see that the volume in the candle is out of position. And what I mean by that is, as an example, I'll just flick it off real fast. We have a bearish engulfing candle here, right? What's important about this level is that if we look at the current or the 1 hour, right, with the MDVD on, what do we see about this candle? Is that the majority of the short volume is high up in the wick with price moving away from it, right? Moving down. So these are valid shorts. It's high volume. That's essentially when you see the volume blocks, that's showing you where the majority of the volume is in that candle, right? When you have stuff that's out of position, you'll have stuff like this, where you have, bullish volume, the majority of the bullish volume above where the candle closes. And then the next candle, well, you essentially have bullish volume out of position. What happened in the candle after that? We went down, held some levels, came back up, bullish volume again out of position. Where is it also failing at? It's failing at a swing. These are important levels. What about here? We have bearish volume holding to the downside. We also have this blue line here, which is the point of control on the current 1 hour. So it's still a very relevant level. And then by the time you're closing with the volume in control, failing underneath the point of control, failing to the downside to retest the swing structure, it allows you then to say, okay, these are points of reversal. So I'll type them out just so we have them. But with the MDVD, there's like 4 points that are important. Reversals with the MDVD happen when volume is out of position, or we'll say in control. So the 4 examples of this are, bearish volume below. How do I write this? Bearish volume is below candle close or bullish volume, right? Bullish volume above candle close or bearish volume. And then the other 2, and that's, for out of position, right? These 2 are out of position. For stuff that's in control is stuff like what we had at the highs here at 27.3 on whatever day that is, 27.3 on Thursday at 2 in the morning, my time. So then you have bearish volume above candle close and in position, essentially. Bullish volume below candle close and in position. So this is kind of double down on this to just talk about in position and out of position. So bearish volume candle close or bullish volume means it's out of position. Any questions on this real quick? Understanding like in position or in control, out of position or in control. I'll just keep it as in position because that makes more sense. In position and out of position. There you go. Look at that.
Chris, is there any way that down the road, whenever you got time, to make some kind of a spreadsheet or just kind of PDF that
We're
explain?
actually building out the docs right now more. We're redoing the docs entirely. So
So,
that's that. Yeah, with the cheat sheets and stuff put in there.
I got a question though. So basically, when just like what you said, what happened at 2 a.m. your time when the volume is up top
Yeah,
and the candle closes below it, that's
yeah,
bearish,
bearish.
and vice versa.
Yeah, and this is an example of like this here is an example of bearish volume above the candle close and in position. So it's that, right?
What is in position means exactly? I'm
So
having a hard
in
time.
position, yeah, that's all right. So in position means that the volume that is in the candle, or let's say the shorts, because this is bearish volume, right? The shorts are in control. What does that tell you? If the shorts are above where price is, where price closed, if that's where the volume center is right here, and that's where the close of the candle is, these shorts are essentially in position to profit off of this, in position to take profit, right? Does that make sense?
Got it. Makes sense now. Thank you.
Yeah, and no worries. And then conversely, right, you have one here where bearish volume is below the candle close, which means it's out of position. And then the next candle, what do we get? Bullish volume above that, still in position. So when you have stuff that's in position, like that's a perfect example of, this is bearish volume that's in position, right? This one, bearish volume above candle close and in position. This is bearish volume below candle close or bullish volume, which it's both. It's below the candle close and below the volume. These are the points of reversal that are very easy to see, right? Even here, you can make that argument to retest the volume. Why would it take out the positions if they're already out of position? No, it's a good question. It's a good clarifier. Absolutely. You know, like here's a bit of a sneaky reversal, right? We have bullish volume, closes bullish. It's technically still in position because it's not closing beneath any structure. If the bullish volume here had been like closing up here, I'd be like, okay, that's kind of out of position, not really a good trade. Or how about here? Here's bullish volume above candle close or bearish volume. It's that one. Does that make sense? Why? The majority of the longs are above where the candle closed, and then it got dominated. Does that make sense? Any questions? So yeah, with using the MDVD on the different time frames and levels, we can use this swings to our advantage if we're looking for reversals, especially for scalps. Bullish volume, slightly out of position, not entirely, but slightly enough to where you could try to take a short. Uh, you know, movement up into the structure, testing levels, closing back below. Bearish volume still in control, closes within the candle, and then steps away. A lot of times it'll be a little bit of a harder test for most things. But as an example here, what do we have locally on the current 1 hour? We still have time to figure out. The majority of the bearish volume is it's flipping because the candle's not closed yet. But wherever that volume lands, essentially, is going to be a big determiner of where if we're going to continue to the upside or down. If we see some reversal and then the candle closes up here, bullish volume in the wick to the downside or in the body of the downside, we see that locally bullish volume's in control. So again, it only locks in once the candle closes, but it's very powerful as far as seeing those four different scenarios, right? Price moving up, volume's quite low, bearish volume in control, move back to the downside, right? And it's not going to be perfect. Like there are going to be times where it goes differently. A lot of in this ranging structure here, like we had going into yesterday in the afternoon. It's a little bit of a nasty zone to trade on the 1 hour. Could you have traded on the 15-minute in this area? See if it loads up here. Yeah, there's a couple points you could look at potential reversal, right? Here's one. Here's a very decent one. Here's one where that's in control. Here's where it's out of position. Here's where it's in position, right? And at the end of the day, all of this should be based off of risk reward and what you're willing to lose compared to what you're willing to make. Like it would have been hard on the 15-minute to take that long, right? To long this structure because we're still bearish volume in control, and then we have just a full send bullish candle. Then what do we get in the next one, right? We start to see some failure. Here's a perfect example of a close that led to essentially a failure, right? Out of position. Bullish volume in control. That type of stuff. And you can use these things to scalp. And the more you use them, combining it with stuff like swings, because the swings, they still work on the lower time frames. All that swing stuff we talk about still works in the lower time frames. Absolutely. We pop that off real fast. Where's the high that's put in? It's here. It's not the nicest high. Let's go from the initial high that it made. Right? Is that an important level? That's an important swing. Yeah. What about the high we actually put in? How about we do it from that one? You got the perfect retest of it to go down. So a lot of these things, it's a combination of tools, a combination of using everything at our advantage. This happens, we get a bearish divergence, we get the next candle fails at the swing, we move to the downside, fail the point of control in blue, multiple points of confluence that take us back to the downside. And you can use that over and over and over again just to find levels, find what's important in the overall structure. But again, the tunnel vision of the lower time frames is the danger with most of these things. Any more questions on MDVD or using some swings lower time frame? Let's check funding real quick if we're actually seeing some gains or not. They're pulling bullish funding. Bullish funding is going up at the same time as that's coming down, so it's not great conditions for longs locally. Out of position, bullish, regain of a swing, boom, move to the upside. So retest of June, failure, come back down. Any more stuff on this? Otherwise, I'm going to start moving over into the Uberfib things.
Chris, I got a question. So basically,
Yeah.
I posted a picture on the Fireside chat
Yeah.
just to show what I think. So basically, is that basically what it means, right?
Yeah. Essentially. And the way I'm looking at your picture now. So that's exactly what it is. You
Okay,
know,
got it. Okay.
red volume above candle close and
Bearish
green
and
volume.
green is
Yeah.
bearish. Okay,
Yeah.
got it.
So
Thanks a lot.
the big difference there is that the one on the left is in position, the red bearish. The top left drawing is bearish. The top right is out of position. You know, the bottom left is out of position. The bottom right is in position.
Okay, can you please repeat that again? I'm sorry.
So in your picture, your little the note you just
Yeah.
drew, the top
Okay.
left diagram, that's in position because you have bearish volume above where the candle closed. So that volume, those shorts that's the majority of the volume on that 15-minute time frame are in position.
Got it.
Conversely, in the top right, you have the green thing there. You have the longs, the long volume is below where the candle closed. That
That's out of position.
exactly. Yeah.
Got it.
And then it's just inverted for the next one. Like bottom left, red below the candle close, that's out of position. Green below the candle close, in position.
Got it. Thank you.
Yeah, no worries. Any more questions on this? Just kind of using swings, uh, reversals, that type of stuff. And you can use other things to help. You can use the bands. The bands have been, quite strong, even on lower time frames. I've been more and more just kind of focusing on using what is it? The scalp mode on to kind of give me a perspective. But they're very respective, and they work quite well with everything else, right? What do we want to see? You want to see bounces at levels. You want to see holds of structure. If I just turn off the colors on this thing so I can keep my MDVD on. The fights of the colors, exactly. I have to do some deconflicting stuff with it. There you go. So there you can have it with that on, with the bands on, because the bands are quite helpful in scalping as well. See demand zones created, see the band reaction, the rejections, using that with MDVD and some oscillator stuff. I mean, you've got some pretty easy levels: bullish divergence, tests of those bands, gains back above, in position MDVD after a test on the bands, and then the next candle starts regaining the daily. Like a lot of this stuff, you're looking at multiple points of things saying the same thing. A lot of people will focus on things that, like, I need it to be 100% all the time, and those are very rare when you get everything saying the same thing. So I would focus more on hitting a checklist, hitting, like, if you are scalping and you've put a couple of the tools together that really work, 4 or 5 things. You've got the oscillator either turning to the upside after being heavily oversold or bullishly diverging. You've got bands hits. You've got, increasing funding rate as price is going up, like that type of stuff. Rejection of level, gain of level, and then of course using simple price action stuff. And at the end of the day, you still need to be realistic with your targets. I think that's probably the majority of the problem, right? People here, it's like, well, I want to try and take a long here on the little bullish retap of the daily open. Where's my first profit target? Essentially, you target the high, the previous high, the point of control, and then your next one would be the June if you're scalping in these lower levels. Is that still enough to make some money off of? Absolutely. And what happens in these zones? What do we know about 0.7 and 1.5 as far as 0.75 and 1.5 as far as percentages, right? The scale here is the best and worst tool that exists, because most people look at the scale like, oh, if I would have bought that at 100x with $1,000 and sold there, I would have made blah 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 blah. That's stupidity. Use it to understand liquidity. Use it to say, well, if that was the low and that's the high, what do we know that happens at 0.75 on liquidations? 100x's are liquidated. Yeah, and at 1.5%, what happens with 50x leverage positions? Liquidated. So it's a lot of those type of things. It comes with time, but all these little things can kind of work through your head, and the more you practice them and actually action trades, the more it'll start clicking. As like, yeah, I can do that. I can just smash that. Okay, cool. Rejection of the June, looks in short, come back down. Okay. Oh, secondary chance of short on a little bounce, continue away. But most people will panic, unfortunately, not set realistic targets. More and more, most of my trades in these type of structures and zones, I will literally look for a 3-to-1 or higher risk reward on my first profit target, because it keeps me honest and it makes sure that I maximize my chance to both win the trade and put my stop loss in profit, which reduces capital risk. So there's a lot of things you can do with it. Any other questions? Otherwise, I'm going to go do some Uber fibs. Yes. Yeah, I think it's possible. We've kind of explored a couple ideas with it. I'll talk with Mr. Bing and see what we can put together. The only reason I didn't have it essentially doing that, because I didn't want it to pop too much. But given how much we're using it, I think we're kind of eyeing the next project of being an overhaul in auto charting tools. Since there's a couple things that nobody really uses, like I don't know how many people use the trend lines, but or the, what do you call it? And the ranges and global sessions are still good. The price projection, that's still very much what do you call it? An experimental. We're still testing stuff out. Yeah, yeah. So price projection and trend lines a little bit more wishy-washy of like, seeing general trend and trend break. But I think we're gonna start repurposing it to a little bit more specific to price action and be like the auto charting tools, and it's gonna be price action specific. And that's what we want to do essentially, is build out the swings to kind of focus on that, and then maybe add some more time frame options, like having extra dailies or extra weeklies, that type of thing. But just because we're all moving into that direction more and more, and as cool as price projection is, it's just not heavily used. I'd rather have something that's heavily used and works better than like a cool little selling point, essentially. So yeah, it's a good point. Yeah, exactly, because it's already pretty robust. Yeah, it's, and like liquidations is a very it's a very resource heavy indicator. We know that. Yeah, yeah. Always enter and take profit at maximum liquidity. Always the goal, right? Cool. So any more questions on that? Otherwise, I'm gonna move on. Actually, I'm just gonna move on because I got some other stuff. So yeah. No, don't even get me started. Ugh. Yeah, I think he was trolling us though. Yeah. Okay, so looking at the swings, looking at the Uber fibs and all this stuff. Speak of the devil, and he shall appear, right? No, we were gonna do some Uber fibs now, Waloran.
Yeah, I heard the previous ones, the previous talks, but then my girlfriend called, so I had to hang up. So just
No
let me
worries.
know if you need me to draw some fibs for you.
Yeah. So with the fibs, it's the same thing. We kind of principles. We isolate swings, high time frame and low time frame. Where's the absolute high on the structure? There. Where's the important low structure in the current move? There. Can we go further back? Absolutely. Where's the low that's important? The COVID dump. That was the previous low that essentially broke the structure, that regained and started the move. So we can kind of use this and then go lower time frame, because now we're looking at it from essentially, a macro perspective, right? We have the low put in, break a structure to the higher low. We can also use the bear market lows of the previous cycle. Again, it's a little bit more of testing to see what works the best and which things are most reactive. With the Uber fibs themselves, what we're going to be doing is using our Fibonacci retracement tool. And then from that, I have a custom template. We just, Uber fib, God fib, whatever you call it. But these are the numbers. It goes from 0, and then we do, I'll probably put in, actually, I had the 618 in there. Not that it's super important, but it goes from 0 to 256 with the retracements being the 618. The reason that's important is that we're looking at kind of like that golden ratio as price projection. Now, the first time I saw this was several years ago, shooting the shit with a friend who, Will and I know, who used to work at Citibank and all this stuff, and talking about some of the projection modelings that some of these big players use. And a lot of the guys are obsessed with Fibonacci retracements and using them for price projections. So with this, we can now do stuff like, since we're in a bear market, we'll take it from the high. I'll just leave that as is. So we want to isolate the high and the absolute move. Since we're still in a bear market, we're looking at retracements that retest stuff, right? So that's the high that we put in. When you're looking to place an Uber fib, you're always taking it. So since we're taking it to the downside, right? We're taking it to the downside. What you do is you look for the high of the swing, and then you pull it from the next low to the lower high. Why? Because you're breaking trend. That's the start of trend change, is where you plot these things. So I'll remove that. We know that that's the high. Do we see a very clear low and then a lower high? You can make arguments for this. I know, like, people get a little bit wishy-washy about the levels and like, oh, but this is that and whatever. It's not super perfect for that thing. So what I like to do is use the weekly to kind of see the level, and then I'll go lower in time frame to kind of find some better price action and structure, right? Like even here on the daily, if that's the high, here's the first low. And then what's the lower high? The first essential, say, hey, we're breaking there. The reason this is because now we're seeing the first start of the bigger trend change that breaks us down. So what I would do then is that, since we're going to the downside, I pull it from the low to the lower high. I'll change the color so we're not mixing stuff up. Let me see, green. Green's probably better. There you go. So with that, we look for, essentially, when we fail the swings to the downside, we're giving ourselves levels to potentially short or to potentially gain, right? When you look at this on a higher time frame, as far as like levels that we test, right? What was essentially the no chance of return to go back into a bull market? The loss of the 8618. Now, since I'm on log, we can use the argument that you can just turn log off and it'll be a little bit different. Yes, that's the case. What's the absolute low? You could see here on the 16618. Yeah, it's all the way down there. With the Uber fibs themselves, the big levels that are important, for at least what I've found on crypto, is the multiples of 4. And that means 1, 4, 8, 12, 16, 20. And yeah, you can use different combinations, but usually what I get with this is some very, very clear levels for testing and retesting, and even on higher time frames, right? We break down and create new lows. We look like we're moving further to the downside, going down to test this level. It'll never go back there. Don't think it will. What's the important level to gain above? What essentially higher time frame breaks us back up into a bull market? 48. Gaining 48, going back into this kind of high structure, that's essentially the big level we want to see a hold on. I've seen some arguments as well. People were using if you're on log as an example, right? You'll see a little bit of a change in the overall structure. For me personally, it's dependent on the swing itself, and you'll see some transitions and some differences. I like this for price projection because you can see usually some very interesting structure appears with it. Now, because we've already had the breakdown, we've already had the loss of level, essentially, right? I'll just stay off log because it's easier to explain. We've had the loss of level done, failure to gain done. We actually retested this thing perfectly back on the 10th of May, and then lower high off a cliff, right? What do we do here? We came all the way to the level. We became a resistance as we broke beneath it. Then we started closing back above. Again, once we put a low in and we're making a higher low, you can start looking for uber fibs the upside. So focusing on this now, given that what we know with the overall structure, where's the low? Since we're going to the upside, where are we going to pull it from? If we pulled it from the low, the next low to the higher, to the higher, no, excuse me, we pull to the upside here. Let me make sure I'm very clear. From the high, we pulled it from the low to the lower high. If we're going to the upside, where do we find? We find the low, we find the next high, which is here, and then the next higher low, which is there. I'll change these to color red because if that makes sense. Because that's a bearish pull, essentially. So where do we pull it now? We pull it from the low, we find the next high, and then the higher low. We start to see some magic happening as far as gaining and losing levels a little bit. Where's our next big confluence point? The next big gain of level that is not only repeatable on the to the low and to the high. What I would do then when I have overlaps, because you can always pull multiple. This is how Will, when if you guys little cheat, if you ever see Will plotting these kind of like zones, these little sections, you're like, where the hell, why are you plotting that? From this. When you have overlap of these levels, you find the most important levels on the chart for macro tests or failures, right? Here's the next one. I would almost argue that these points here, and I'll turn these off real quick, just so we can kind of focus on the levels themselves. These points here are probably the two most important parts of the chart, and most people will never even look at it. You know, that break above takes us back within the bull market lows successfully enough to where we've gained the previous range before we drop down below, right? That's a loss of range going down. We're now gaining back above. We're failing at the local range stuff, failing to make new highs. We can still fail if we could pop to 32 and then swing fail and come much lower, but it gives us an opportunity to test stuff. So you could do this on any chart. Stocks and whatnot and indices, I like multiples of 5 work pretty well. But generally on crypto assets, when you're looking at 4s, they look pretty damn fire. Let me just see if there's another one we can look at in here as an example. BNB, let me turn these off. That's right, I already had some good. So BNB higher time frame, right? One of the biggest expansions of a coin that's ever happened, especially an existing coin that's still holding major structure. Yeah. This was one of the ones that we had in going into the bull market because of how BNB was, or Binance was expanding. Same thing to the downside, some local tests of structure. We can use that as well. But overall, this was one that we looked at very heavily as far as gains and failures. Now, we're not using multiples of 4 here. We're using, the full expansion. The difference being is that when you're using like the whole 256, that 9 times out of 10, the 256 is the absolute that is the major expansion that you're looking to fail at. What are we seeing on the local stuff? Do you think this level's still relevant? Of course it's freaking relevant. We're seeing the macro failures on a higher time frame. Essentially, it was restriction, gain, restriction, support, restriction, fake out, close below, resistance, gain above, failure. We're getting close to it. And the longer these things go on, the less relevant they are over time. But, where we actually got this thing down, where did we pull it from? the start of the move for everything was back in the COVID low, right? Most things, if you want to see how they performed, you look at the COVID low. Can you see it on the daily or no? What about on the 4-hour? Is that a very clear level? You have the low, you have the high after the low, and then the higher low. How respected was it overall? A little bit wishy-washy on the 4-hour, which is fine. But what about when we hit expansions of gaining stuff like the 4618? Quick loss, regain, continuation. Rejection, continuation. Quick fail, break above, and then by the time we actually start getting moving, we can start continuing the long in these positions. Eventually, and this is it's a hard reality that people need to come to grips with. When you're in essentially a market like crypto, where 2/3 of the market is based off of Bitcoin, and Bitcoin is a deflationary currency that has a halvening every 4 years, approximately, you can actually make it easy. This is why most of the reason why we trade crypto is for two reasons. A, it's predictable by cycles on a higher time frame. And B, you have a shit ton of data from on chain and from other stuff you can pull that lets you more accurately trade it. So the fact that people lose a lot of money trading on crypto, 9 times out of 10, it's that they don't know what they don't know, which is the data, the information, the market cycles, the trends, that type of thing. And that's what happens every single time in a bull market, right? Every single time in a bull market, two things will happen. One, if you don't have friends who are involved in trading or crypto, they will ask you about crypto and start asking you about, oh, should I buy Bitcoin? Watch out for that, right? Same thing as, people trying to like massively get leverage positions because price starts slowing down at the highs, right? The free trades are over. You got to start working for it in the bull market. Leverage starts increasing. What does leverage give us an opportunity to do? Look for essentially cascading liquidations where we have, single daily candles, even on stuff like this, where you broke down, as an example, right? Here's a daily candle that went down 20% and then recouped to only doing 5%. This is only possible through leverage to do those big moves, right? All of them. It's the same exact thing. It's the same reason why Bitcoin broke all of its structure when it did to the downside, right? Who remembers this day back in December of 2 years ago when we did this whole downside move? What was this? 22% down. That's the entire upside liquidity and most of the longs that were put in on low leverage being taken out. 23% down on a day. That has liquidated literally everyone except for the 1, 2, and 3Xs. I don't even think 4Xs are safe because of maintenance margin and stuff. Yeah. But these type of stuff is only possible during leverage, and that's why we look at it from macro market cycles. We can use the price projection to find macro market cycles, just like we can use this to look at lower time frame stuff. Right? So I'll go now just to kind of show the lower time frame. I'm on the 1 hour. Here's the low from back on the 10th of March. Where's the low? Where's the high after the low? Where's the higher low? And now running into a nasty flat. There are also you can also try for the lower time frame stuff. You can do every single level. It's probably not going to be as accurate because it's a little bit wishy-washy as far as the structure. Plus, you've had major retracements in the zone. So arguably, once this thing essentially failed at 10 and made that new low there, that's probably the start of a new move, just in general. Or the fact that we made a new low back in at the end of March. So again, with the Uber fibs and the structure, if you're trying to use it to trade lower time frame and more local, you want to make sure you're using important levels, macro levels for failure, that type of stuff, right? Here's the local high that we've had in the structure. Where's the next low? Where's the higher low? Or the lower high, excuse me. Reasonably so. I'm on every single one being marked, so I'll just do multiples of 4. Pretty respective. Well, so the multiples of no worries. No, it's so the multiples of 4 is essentially it gives you a kind of a midpoint in between quite a few of the major tests. At the end of the day, the 1, 2, 4, 8, all those are really important. But the big thing that I look at myself is that I also look at the intra positions. So like if I'm looking at the 4, I don't want to just wait till we come back to the 16 or something like that. What I would rather have is like some kind of demarking line. If that's the structure I care about locally, what's happening now? Well, we break down, have we had any bullish retests of the level? We had one that instantly led to a failure. Other than that, you've had 1, 2, 3, 4, 5 chances to short the thing, essentially. What happens if we gain back above? We're looking at the current low as a potential projection. And this is how you can go kind of back and forth. Can I find, even on the 1 hour, is this a little bit too close to structure? Yeah, right. It's a little bit hard to see what's going on the 1 hour. Can I look low time frame? Low, high after the low. Yeah, it's a little bit wishy-washy on like the 15-minute as well. So for me, it's not ready to give me like an actual good level, essentially, right? Here, you'd almost be waiting on the 1 hour for something like, if that's the high that gets put in. So if that's the low, if that's the higher low, well, is that the higher low? Exactly. If that's the high, that's the lower high. Or if that's the high, if you want to look at the local stuff, right? Failure, failure, continuation failure. Never never look at the 15. Yeah, but generally this thing works on every market cycle. Yeah, yeah, exactly. I mean, here's the Nasdaq as an example. Here's the low that we put in. Can we see a higher, like the high after the low and then a low? I mean, you can make an argument for this on the daily, but again, we're on the daily time frame, and we probably just change this back to the normal Uber fibs, right? Is important stuff happening? Yeah. And I've seen some people use the logarithmic as well. They put stuff based on a log scale. It can work, it can not. For me, I'd rather just keep it simple and keep it off when I'm actually using the price projections. That's just me. You'll get a little bit change in the structure. I don't like that. Better just leave it off. Or if you're doing it, make sure it's on both. For me, it just makes more sense to do it this way. How about lower time frame? Can I find a better one? Yeah, much better one on the 4 hour. Boom. That's the high after the low, and that's the higher low. Is that pretty damn respective? I'd say so. You'll always see when it hits the best is when all of the levels start to line up, and then it's like, okay, that's the one. That's the one that's important and matters. Where's the next big level? 1470, 74, right? What else we got up here? We got some monthly levels, right? Monthly level, monthly level. It's all right there. That's usually how it works, right? So what's our main point? We want to see a gain to go higher. What's the main point that we want to see failure of here? What else do we know about that level? It's essentially the back test of the high that failed us and went lower. By the time we were going into the second week of April, it was done. So I know it's a lot, and Uberfibs, it is what it is. It's a bit of a thing. We haven't found a good way to be able to pull this structure and like codify it, just because it's completely in relation to what time frame you're using it. But I think it's a pretty powerful tool, definitely, just to have in your toolbox, And it also, again, gives you really good levels, even on the start of the moves. Gain, close below, gain above, close, continuation, that type of stuff. So, any questions on that? I know it's a little bit of, we've had some guys in the past when I show this stuff, they're like, either they're like, nope, that's all shenanigans, lies, or, it is what it is. At the end of the day, this is one of the best things that we use to kind of target stuff going into market cycles. So, any other questions on this or anything else in general? I'll kind of open it up. Nope, we're all just happy. We're all geniuses, which is good. Yeah. Yeah, I guess just looking at the local structure as well, it's been a pretty nasty, crabby range for, a month and a half since we broke down. If you didn't catch the short, which I'll be honest, I was a little nervous at 30.72, but that's usually the best trades is when I'm a little like, it's the price action's relevant and it's doing what it's supposed to do. But, again, another point from Will, he always says that is like whenever your best trades are usually when you're a little bit like, is that really? But it's respecting everything. So we'll see what happens. I'd like to see Bitcoin do some expansion. The VIX is dumping, and this is something interesting. Like we're seeing low structure on the VIX that hasn't been seen since like November of 21. Before we started the major move up on the VIX, the bigger rounded top. What? Oh, the others dominance? Is that the one? Yeah, I guess that's true, but I've never looked at exactly what's in the market cap others. All of them? Yeah. 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 How do you, I'd love to have that angle because I know you've been doing it for I mean, pretty much since I've known you, is that you only trade micro caps for the most part. Well, not only. Yeah, and not getting burned by it. Yeah. Yeah, I think it's time for you to give us a shitcoin masterclass. Shitcoin fireside. I'd love to hear that. Blame you for it. uh, any other questions, guys? I know Nice little Friday we got going. I Well, there's also a grace period. Plus, apparently, China. I've been looking into it a lot, and to kind of reiterate what's happening with that, the um, the Hong Kong has opened up a regulatory, like their version of the SEC in Hong Kong is opening up crypto exchange licensing, and now they're giving a grace period for exchanges to register. Mainland China is technically still banned. Like that hasn't changed from my understanding from what I've read. Um, but it does open up the opportunity to see something essentially uh, in the future. But are they still going to you? That's awesome. Yeah, and and you don't want to cash settle. I mean, from a perspective of like legal perspective, you don't want to go to stable. You don't want to go to like cash unless you're ready to cash out and then pay whatever your. No, no, no. You don't, I mean, the only time you ever go to fiat, or the only time I ever go to fiat is when like I'm ready to cash something out and be like, okay, send that over, send it to my accountant, make sure it's like, yep, capital gains, 21% or whatever the fuck it is that they steal from me. They're gonna get you one day, dude. Yeah. Yeah, but it feels good though. That's something like people don't think about. It's like it feels really good to like spend money you've made crypto or trading or whatever. It's one of the best feelings there is. I mean, I paid for most of my house with it. Eh, no, I've just been in longer. I've been burn harder, longer, way back in the day. Yeah, and then Will's been in longer than me. Yeah, that's essentially the fear for most people. 100%. Yeah, I figured it was some fun, dude. Oh man, that's funny. Yeah, the moment it got a perp on Mexi, it's just been down only. Dead. Freaking that makes me happy. Shit, it's like the Pepe thing, it's like the Ben thing, it's like psyops, all these stupid meme tokens that are just totally fucking pointless. Um, I mean, yeah. Oh, I shorted the shit out of this thing. Like this was one of the best ones I've had in a while. 10. Yeah, but that's the thing too. It's like I'm cool with getting stopped out a couple times, really tight stops. That's like always my thing with trading shit coins. Like the problem that most people have is that when they put their stop losses in, or here's even more stupid, they'll actually use their liquidation level as their stop loss. And the problem with that, and I've seen that, it's like, yeah, it's cool, just use your liquidation level as a stop loss. Well, the problem is your liquidation level is not the most effective return on your stop or on your capital. Yeah. It's like if you're in a 10x short position, where's your liquidation level essentially? Right? It's like 7.5%, something around there, right? Give or take, depending on what exchange you're using. But even at 7.5%, like again, what you should be getting 10%, right? If it goes against you 10%, you should be getting that, but you won't. You only get so you're cutting. So think about that. If your true liquidation level is at 7.5%, when you should be getting at 10x a 10% retracement against your position, what does that tell you? That means that what's the difference between 10 and 7.5? 2.5. What's that out of the 10? It's about 25%. So you're essentially only getting you're essentially losing 25% of the value of your capital in a position by letting it go to your liquidation level. No, yeah, but that's the thing. It's the easy, and that's the problem with using liquidation level as stop loss, because you're essentially giving up on 25. Like in that example on a 10x, you're giving up 25% of your capital for no reason. That's a very inefficient way to trade. That's the way I look at it. Is an efficient way to trade? Yes or no? Like liquidation level is never the efficient level to trade. Ever, 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 never, ever. Ever. Yeah, I mean that's the thing that you can do is like, as an example, I took Pepe as an example. Let's say I put 1K at a 10x leverage, right? So what's my essential trade value? My essential trade value at 1,000 10x is about 10K, right? If I'm shorting that, what can I do then if I want to take my capital, my initial capital out to move in other positions? Let's say, we talked about this a couple weeks ago. We talked about the loss of level and the shorts from like the 030 level, right? Let's say I shorted that, which I pretty much did, but we shorted this. What do we do? How do we pull the capital out? Well, two things have to happen for you to start messing with your leverage. Your stop loss, if that's my entry, right? And I'm taking a short, my stop loss, which was, essentially somewhere up here, needs to go in profit. It needs to go under my entry once price starts breaking down. So when your stop loss is in profit, you can then look at your leverage, and for most exchanges you're allowed to do this. You can pull your initial margin out, and let's say, well, I have $1,000 in my position at 10x, giving me a total value of 10K, but I want to increase the leverage to be able to pull the margin out of the position. So what do? You jack your 10x up to 100x, and then you pull $900, right? That's out of your position, leaving you with $100. Is the total value of my trade $100 at 100x still 10K? Yes. Is your stop loss still in profit? Yes. Now you have a high leverage position, but your stop loss is in profit, and now you have freed up 90% of your committed, because 900 out of 1,000 is 90%. You've now freed up 90% of your capital to take other positions. So not only is your trade that's in profit have zero risk to your overall capital because you cannot lose money, but now you're also able to deploy your margin that you were using for those positions into other positions. And this is how you can have 5, 10, 20 positions open with zero capital risk to your overall trading account. And that's the goal. That's the end state to get to. Between that and staying like perpetually hedged on a high time frame, that's where everyone wants to sit pretty. But that's the only way you can do that essentially is I don't mess with the leverage until my stop loss is in profit, and only if I want to redeploy that capital to another position. Because even at 100x, you have to now pay funding rates, and funding rates are higher if you're using more leverage. So just keep that in mind as well. No, no, exactly. So yeah, I remember that you showed me. Yeah, and there you go. You can crack that up to 25x and put your stop. Make sure your stop's in profit first. Crank up the leverage. Yeah, and then yeah, exactly. And then you remove it. What is render doing? I haven't looked at render in a while. I forgot to look at it today. Yeah, render's getting back at a macro level too. You longed 1 point. Oh, you longed it way down, didn't you? Yeah. Ver- yeah. Still looks good. Yeah, it still looks good. I mean, you have this nice flip level here too. It's still holding the flip. It's kind of like in a mid range right now between the high and between the level that it gained that went to the high. Did you take the long from this? Yep, everyone did, dude. It was still a gangster freaking trade because it was like it's the macro level and it went straight to it, like the biggest weekly time frame range test, and I went right to the level. Yeah. Oh, this one. Oh yeah. The initial flush out. Yeah, that's an amazing one too. Well, cool. Did you record the session, by the way? Okay, thanks. Awesome. Oh, good stuff. Well, cool. I'm gonna go. Yeah. So I'd say like yeah, swings, MDVD, and a price projection, and general talking about leverage and understanding it. Cool beans. Yeah. God. Yeah. Got the newborn now, so it's like you turned a week old yesterday. So it's just it's a lot, but the wife's helping me out a lot with it, which is great. Fantastic. Oh yeah, I mean, I don't have tits, so it's kind of not really much I can do except for change diapers. Oh yeah, it's gonna be hot this summer. I'm gonna have to trim it down a bit. We'll see. But I think that's about it. I'll leave it there, and then if you could just do me a favor, just tag Premium and Lifetime when you have it uploaded in the section there in the Fireside library, which is pretty robust now. We actually have a ton of good content. Yeah, yeah. That's good though. We'll make sure also if you guys want to see some charts or something, just prop them in like the premium chat there. We'll go through a couple. I'll post an update probably once the CME comes out. So this is probably tomorrow. Sometime over the weekend, I'll post a CME update to see how we're doing and where the level's at. If you guys want to see where the CME level closes every week, because it is a good level for a retest, you want to look at I'm UTC +2, so it usually closes at 8 o'clock UTC, Universal Time Coordinated, is when the CME closes, BTC 1 exclamation mark. And the only reason we look at this is that the CME has very, very high hit rates for filling gaps. So 80-90%. No, it's it actually closes at 8. So yeah, 10 o'clock like Central European, and then it's 8 o'clock UTC. Because we're +2, remember? 8 p.m. 2000. Yep. So it'll be interesting to see what happens with it. Yeah, Tesla should be. It's probably ripping. Yeah, it is. Oh, it's still going it's still doing the parabolic move that we put in on Wednesday. Higher low. Gained. Why didn't I look at this today? Look at that. Gained it Thursday. Regained our 206 level to the dot. Like, Tesla is one of those things. I swear this is like, Will and I have had conversations about this one. Tesla's like the one stock that trades like crypto. It's so bizarre. Like, there's a perfect translation of price action from crypto to Tesla.